Good morning, everybody. Kirk Spano. It is Monday, May 12th, 2025, and the world of uncertainty continues. Today, we had an announcement about a deal to seek a deal on a deal with a China deal. I don't know. I'm having a hard time keeping up with what the news actually means. I think the most important takeaway that we can get from everything going on with the trade negotiations is that the 10% baseline tariff absolutely is real. It is what they have said from the start. It is what they have followed through on. It is what they have reiterated. So you should not expect the 10% import tax to go away. And that will have ramifications on corporate margins and earnings going forward, as will some other things. On April 18th is when I wrote this article. I said, my base case is that after a rally tied to a budget deal and government announcements about trade deals, the markets resume their downward path. I said there would be a rally on April 18th. The very next trading day, we went on a rally. I feel like that was pretty good prognostication there. So here we are. April 18th is the Easter weekend. The rally started the very next trading day from when I said it would. Now, did I know it would be that next day? No, but I had a feeling. People are asking now, including in chat, what do I do? Well, if you had been selling cash secured puts down in here, and we can extend this to 3 months. If you had been selling cash secured puts in this area, a month of time would have elapsed, give or take, and those puts would have come way down in value. You could close them now that we've had the rally, because the combination of time and a return of price makes those puts less valuable. So when you sold them to open and collected whatever premium it was you collected, you can probably close them all now for less money if you want to. So you need to take a look at, and I really should have had this up, you need to take a look at what you had sold for options and decide which of these you think you want to close. So I've put this in alphabetical order so that we can keep track of the various positions. And what you should be asking right now is, okay, these May puts expire, I believe, on Friday. Yeah, the May puts expire on Friday. Are there any that you need to bother closing with 4 days to go? I don't know, maybe. I think a lot of them will probably just expire on their own because they were probably out of the money to begin with. Take a look at the May 25 AST Space Mobile put. It might expire, it might not, but I got $5. So if those contracts are assigned to me because the price is below 25 by Friday, I'm okay with that because my net price is only $20. And as I will talk about in a moment, I really, really love the idea of AST Space Mobile being assigned to me. Options expire on the third Friday of the month. So that would be May 16th this month. We go on through end phase $80 puts. I had already closed those. These will be close. What is Flagstars right at $12.50 right now? The July 10s, I'm cool with those, the ones that I still own. Some of the Junes you can take a look at. Let's see, what do we have for June puts? Not many. Rocket Lab, June $17 put. I'm cool with that one. If it gets put to me and I have a net price of below 15, I can live with that. These Sirius satellite puts, I'm okay if these are assigned to me on Friday. It's going to be a close call. It's $21.87, so I'll probably get assigned to me. I can live with that. Nice dividend paying stock that Berkshire Hathaway just keeps buying, so there's a floor under it. These calls likely expire, and if somehow there's a huge rally and I get called away at giant profits, I can live with that. What else do we still have out there? I closed some of these, not all of them. With the July $30 puts for TAN, I used this little rally to close some of those. You don't have to. I still like the idea of getting TAN at 27, but I'm pretty sure that this rally in the stock market is coming to a close soon. I'll show you why in a second. The May $22 puts for Unity gives me a net price of 19. I can live with that. Net price is 17 if this one gets put, but it shouldn't. It's a little over. I don't think that gets put to me. Hard to know. It moves a lot in one day, right? It moves $1 a day. June 19 puts on Unity. I probably live with that. But if you're not in love with Unity and you've made profits on all of these puts that we sold, go ahead and take some of the profits. Think about it in terms of how much of an asset allocation you want to Unity. That's the nice thing about selling puts is if you become profitable, then you just do a measurement. How much of this would I be willing to take assignment of? Right now, I can take a profit and eliminate the risk of being assigned more than I want. If you are an option seller, you really have to look at your positions a few times a week, and you should be going into this with a plan of what you want to do if certain things happen. I saw some posts in the chat today about this rally, what do I do now? Well, you should have had a plan for if there was a rally. If you're trying to make decisions in real time, having not planned for them, you are not doing a good job managing your own money. I lay out scenarios over and over and over again so that you see the different scenarios so that you can have a game plan if they play out. Preparation over prediction. So while my predictions tend to be, more right than most people's predictions, the reality is that, a third or 40% of the predictions are, in the range, but something a little different is happening that 40% of the time. So I should have a game plan for what I want to do when there's a wiggle in the line. And right now, the wiggle in the line is a hardcore rally in the S&P 500. So do you believe that we're in a new bull market, or do you believe this is just a bear market rally? You know what I believe. I think that there is a mini credit crisis coming soon. I did the video last week. Go ahead and take a look at it, the macro video, right in the article today. All you have to do is a simple search, and you can even use Google still, U.S. Treasury Debt Wall 2025, and they lay it out for you pretty good with their little AI summary, and then the links. So this is the power of Google, is they are starting to incorporate the AI pretty well. But if you prefer Perplexity, as I do, for a little bit more in-depth research, you get a real nice answer about what's going on in the Treasury market. There is a lot of debt coming due fast. The United States has to refinance roughly $1 trillion of debt in the next 45 days. I think they're going to have a hard time doing it. Interest rates are going to get pushed up a couple points, basis points, so that the 10-year Treasury continues to stay pretty firm versus coming down to below 4, which is what they'd really love. There is a massive amount of debt due this year. We have over $9 trillion due by next year. So when you go through here, you take a look at all the debt that has to be refinanced, what you end up figuring out is the upward pressure on interest rates is pretty strong. And all the things that make up stagflation are happening. Now, is it going to be 1970s style stagflation? Almost certainly not. But we are going to see marginal decreases in revenues and earnings at the corporate level. They are already telling us that, and I'll show you that in a second. There's a debt wall and corporate finance coming. Remember way back during COVID, all the corporations got to refinance their 5-year debt for dirt cheap? Well, it's 5 years. And now that debt is more expensive. I've shown the debt on the commercial real estate, and the banks have been stretching that out. And I tell you stories about foreclosures on commercial buildings trickling into the market. There is really no relief on interest rates coming, not anytime soon. So either we can handle refinancing all this debt at higher interest rates, or there's going to be some cracks in the system. We've already seen the repo market having cracks. The Federal Reserve has been in there bailing out the repo market now for a while because the banks are having a hard time lending to each other overnight. Overnight, not a very long-term commitment. The Fed set a record for the amount of repo market liquidity they had to provide. It was either last week or 2 weeks ago. The credit markets are showing considerable stress, and it's unlikely that any magical lenders appear. It is not in anybody's interest to become our magical lender. China ain't going to do it. Japan is holding out. Europe ain't going to do it. OPEC, maybe Saudi Arabia buys a little bit more U.S. debt. There just aren't aggressive buyers of U.S. debt anymore. A lot of countries holding steady, but virtually nobody adding. Our deficit is not going down right now. It's been going up. And the big, beautiful bill that's coming is going to drive the deficit up again. Lutnick was on TV this morning. He said, we're picking up $20 or $25 billion a month in tariff revenue. Okay. So let's take the 25 billion and let's give them the high end. And remember, every time they've thrown out a number, starting with hundreds of billions a month, now they're down to 25 billion a month. Let's give them the 25 billion a month, knowing it's probably, 17 or something. Let's give them the 25 billion a month. That's $300 billion a year. It's not nothing. If we had a flat budget, meaning that we were not increasing the deficit, right? If the budget was just going to stay at its current deficit, that'd be $300 billion to shave off about a point of the deficit. That'd be good. $300 billion is not moving the needle on anything. We have $9 trillion of debt due imminently. So when you talk about investing in stocks, I will go back to something I said here, which is that it will be the small and mid caps that lead when they finally do the quantitative easing that is going to be required to get out of this debt trap. There is not another solution to what's going on in U.S. debt than quantitative easing. Zero. There is no other solution. The problem is that doing quantitative easing requires a crisis or an act of Congress, and they don't have the courage to do it. How do I know that? Because for 30 plus years, Congress hasn't had the courage to face up to the baby boomer retirement crisis that's coming, which is what is driving this debt. That and 100% of U.S. debt since 1982 going directly to the richest 1% of the people. We know that statistic is 100% accurate. Correlation of U.S. debt is 100% correlated to the increase in wealth of the richest 1% of the people. All U.S. debt has gone to the richest 1% of the people. So in that environment of politicians just looking to hold on to power and keep their donor base solid, which is mostly the richest people, would you expect dramatic change? No. Under Ronald Reagan and David Stockman, the United States intended to lower taxes and keep federal spending flat. Instead, they lowered taxes and federal spending went up. Started to blow out the debt, the first time in history that had happened, other than World War II. And it snowballed over 40 plus years as every Republican administration, with the exception of George H. Bush, has lowered taxes. And those tax cuts primarily went to the richest 1% of the people. Like 80% of the tax cuts that the Republicans have passed have flowed to the 1%. Everybody else gets some schnibbles, so they feel good about their $600 or whatever it is. The rest of the money flows to the top 1%. Interestingly, remember I said earlier in the year, to some dismay, that I held out some hope that Donald Trump would actually do some things that weren't prescriptively Republican in nature. And what has he done? He's pushing for the 39.6% tax bracket to come back. Granted, instead of at $600,000 of income at $2.5 million, but still very Bernie-esque. Remember, he said the Bernie fans should love him. And what did he talk about this morning? Was anybody paying attention? For 30 seconds, he talked about it. It was wrapped in there with the drug talk. What did President Trump talk about today? Something I've been talking about that maybe he can pull off. Come on, did nobody watch him this morning? He talked about what Trump Care might look like while he was talking about Bernie Sanders. What have I told you? Trump Care could be the combination of the VA, Medicaid, and Medicare together with a new set of rules for eligibility that would cover 60, 70, 80% of America. Especially, and it could be everybody, if they let corporations opt into it and then just provide the supplement. Keep an eye on that. If he pulls off Medicare for all under the name Trump Care, and he allows corporations with over 1,000 employees to opt in if they feel like it, if it's good for them, I will tell you something, virtually every corporation would opt in. And you'd have the flexibility of choice for the major employers. Everybody else would have Medicare as a standard coverage, and then you'd be on the hook to go buy your supplement if you had the financial means to do so, or get it through your employer if they've opted in. Pay attention, because it could happen. President Trump is the only president in history that has the type of power to pull some of this stuff off. Theoretically, he can't run again, but what would be the only thing that would get us to change the Constitution so that he could? He'd have to appeal to all the Bernie folks. How would he pull that off? Medicare for all. We'll see. A lot of things he's doing are heavy-handed, especially on immigration and LGBTQ right? And a lot of the people who are working for him are clearly running amok. All you have to do is watch Instagram or TikTok, and you can see the videos of some of the ICE arrests and some of the other things that are going on out there. There are some very bad things going on. And either Trump has to crack down on it and tell them, hey, don't you step out of line and then say it's my policy. Or he actually has to punish some people and fire some people. I don't put it beyond him to do that. Presidents tend to govern towards a legacy in their second term. And I think we're seeing that. And I think we'll see more of it. And it is clear if you listen to any of the press conferences, everybody goes out of their way to compliment everybody else. I mean, it is brown nose central, but he hates criticism. And anybody that brings criticism on him is basically on the firing line. So keep an eye on it. And as an investor, this all plays into how will he actually govern to a legacy. I have zero doubt in my mind at this point. I mean, really, I have to have doubt, but I'm having a hard time having any doubt. Just like I told you when Bitcoin was under 20,000, after I told you when it was 50, it was going to 20. When it got under 20, everybody's like, oh, it might go to 5 or 6 because of some stupid chart. I said, nah, it's going to go to 100. And then it did. And I, sold it at 100, not my cold storage, but all my trading Bitcoin. And now it's at 100 again after getting into the 70s. I think we get another chance in the 70s. If we don't, so be it. From 20 to 100 is a 5x. If I miss the run from 100 to 300 or only catch part of it, I can live with that. All I really have to do is sell some cash secured puts on IBIT and I can start scaling back in. We'll see what happens with the debt. If the debt over the next few months causes a market dislocation, I will probably sell a lot of cash secured puts, like soak up all of my cash, all of it, 100%. And I'll do it incrementally over a month or 2 or 3, but I'll get the fully invested again because I have 0%, let's say 1%, just because I have to be officially somewhat skeptical. I think it's 99% likely that we have quantitative easing next year. There is really no other way to get this debt situation handled. They can roll some short-term debt, which is what they've been doing, but that just kicks the can down the road another year or two. Scott Bessent has been doing exactly what Janet Yellen did, but they're getting to the point where there's too much. All right, stocks. Last couple of weeks, I've just done a real quick chat highlights covering some of the different stocks. You'll notice that ASTS was on both of them. I really, really want to keep my ASTS and I want to expand that position. To me, it is the most certain stock that we own that's going to do a triple or better from here. And I actually think it's going to be a 5 to 10 bagger from here. So I had sold some covered calls for $279 a while back on that last rally, some June $30 covered calls, and I did not want to lose AST Space Mobile because remember, I also trimmed some of the stock. So I bought back those covered calls for $245, ended up making like 34 cents or something. So teeny tiny profit. I should have closed these 2 weeks ago when they were like $1. That's my mistake. So when we go here, see, these are the ones I just closed. Yeah, well, I had closed some of them already, but I closed the rest of them today. So some of them I closed at 280 a while back. Now I closed out some other ones at 245. So I'm completely out of this. These were interactive broker trades. So I actually got a better deal at Schwab waiting. Why? Because time value, right? The time value goes away. That's why selling cash secured puts is such a great tool. You just keep putting time value on your side. All right, what's going on with the rest of the market? Earnings revisions have been going down for a while, but really started to fall off a cliff here. So the earnings revisions have not been good. So when Tom Lee or somebody says, 90% of the companies have beaten their estimates by an average of 6%, well, yeah, but they've been lowering their estimates pretty consistently for a while now. Downwards earnings revisions right here. 350 companies in the S&P 500 lowered their revisions or lowered their estimates. I mean, look at where the other times this happened was. So when I say there's a debt crisis coming up, I really see kind of a multi-headed monster. I don't even know how many heads it has. Commercial real estate, corporate debt, U.S. Treasury debt, which is the big one. That's King Kong. Any company that imports anything is going to take a haircut on margins because of the tariffs. Revenues are going to go down because prices are going up, because supply chains are moving, which takes time. This transition is not going to be smooth. And if the pumpers just keep pumping this market up, I will tell you, if you're nimble and you're a good trader, riding a bubble up is a great thing. Except remember, a market can open limit down the same way it can open limit up. So if you're trading, you got to be really ahead of the game. And you got to be taking profits very regularly. Somebody points out that personal debt has been going up. In this month, what gigantic debt started getting collected on again? Student loans. Thank goodness mine are gone now. I can't imagine if I had, after 4 or 5 years, suddenly going to be told, hey, you got to start making that $500, $600, $700 a month payment again. And remember, half the population makes 60 grand or less. And a lot of those college educated people are over 60 grand, but not a lot. They're in the 80s and 90s, maybe 100-ish. Remember, if you're making six figures, you're in the top 10% of the population. And that might be like top 15% now, right? Because of inflation driving wages up a bit. But 80% of the population cannot handle more debt or more debt service. There's just a lot of things, and I'm not saying that they didn't need to be fixed or be confronted. What I'm saying is that they are being confronted. Hopefully they get fixed, but it's going to be choppy, and you can't fall into the trap of saying, oh, the stock market's up for 11 days or 11 out of 12 days. It must be heading to the moon, because it's probably not. If you take a look at greed and fear, look how fast this move was. So we've gone from extreme fear at the start of April to extreme greed by the start of May. What's going to happen? I mean, it can extend a little further, but it's going to turn over again. And when you take a look at the screening using TradingView, which is what I use the weekly overbought, and you see a lot of things that are overbought. They came off of numbers in the 80s. Remember, a month ago, 6 weeks ago, all these numbers were in the 80s, and now they're down. But what's happening on the daily chart? If you switch this to daily, right? See, it says daily chart, more standard. You're starting to see RSI scream higher again. So we can just pull one stock. Let's pull HIMS. Let's take a look at the daily RSI. Look, boom, boom, boom. A lot of the market looks like that. What does it look like on a weekly chart? That was daily. The daily pulls on the weekly, right? Every 5 days of daily is a weekly. Every 30-ish days of daily is a monthly. 4 weeks in a month, 4 and a third weeks in a month, whatever. So suddenly the weekly is overbought again. The daily pulled it up because it sustained for an extended period, almost 3 weeks. So this is going to peak and come back down. Now the next heartbeat, the S&P 500, what's it going to look like? That's a pretty interesting trend, isn't it? Lower highs. So we would expect this to turn over somewhere in the low 60s or sooner, and then double test this bottom is what I think. And it looks like we use Shooter's idea of equality, right? The length of the rally spot is going to be the same as the length of the decline, right? Right in the summer. Big debt due in June. Lots of refinancing, commercial real estate. Companies are trying to buy back more shares to keep their share prices up, but what do we know about share buybacks? Who's making them? Is it everybody, or is it about 30 or 40 companies on the S&P 500? That's the answer. It's like 30, 40 companies on the S&P 500 are responsible for like 90% of the buybacks. Everything else is token, barely offsetting executive compensation in most cases, in a lot of cases not offsetting it, or just employee stock-based compensation. You literally have 400 plus companies on the S&P 500 on net because of the compensation practices issuing more shares. It's right around there, right around 400. The S&P 500 is extremely vulnerable, right? When I say that we can get back into this area, people think I'm nuts. But look, if you go back just to 2018, let's say that history begins in 2018. That's a heck of a rally. This looks like ABC, and I think really ABC for 1, ABC for 2, ABC for 3, I think. So the idea that we wouldn't at least retest this area, I think is silly. I mean, I just think it's 100% naive. And then the idea that we're not going to retest down in here, I think is improbable. I think for sure this gets retested. But if the debt situation doesn't find a golden knight, a white knight, a Arabian night, I think probably in this area is what we see. And the question just becomes is when does quantitative easing become mandatory? So if we get waterfalls, let's say just down into here, and they come out and they come out with a second beautiful bill that says, hey, we're going to have the Treasury and the Federal Reserve work together like they did during COVID to print $7 trillion or $8 trillion or $9 trillion. As you know, my math says that we need at least 15 trillion by the end of the decade. So maybe we get 2 waves of QE, one now, one later. Good candy, by the way, now and later. It wasn't really good. We just had it as kids and it made our teeth rot and stick together and stuff. And look how steep this can be, right? So this next one can be deeper and steeper. And then probably the corrective rally is shorter and shallower. And then bam, bam. When I describe things like this, I sure hope you've learned to pay attention. Because unless there is something magical, it's going to happen. Now, could there be something magical? Sure. Maybe Saudi Arabia comes in and says, we want to buy $1 trillion of U.S. debt. Maybe. In which case, they'll want something in return. What do you think that will be? I have an idea. I have 2 ideas. All right. So earlier I said something about have a plan. Again, have a plan. Don't try to react without having thought through the scenarios and having a plan for each scenario. And when you get a chance, take a look at the Mosey charts. This is a new chart chat room that I put in here. And, we put the charts up at Fundamental Trends too. Somebody brought up Apple ovens. Teresa did a chart there. Somebody asked about Ford. I don't own it at the moment. I've just been selling cash secured puts because the risk of it taking a digger, if the entire market takes a digger, is pretty high. But I do think that this is a stock that does very well after QE and with the improvements of battery technology that's going to create a new class of car called EREVs. Currently the top selling cars in China. I will say that they are very likely to be the top selling cars here. An EREV is an EV. It's not a hybrid with an onboard generator. Those cars have existed. BMW's done one. GM has done one. Technology wasn't good enough. The new technology is, and you're going to get extended range EVs on the market in the next 2 to 3 years, not 5 or 10, next 2 to 3, that effectively roughly triple your gas mileage. And the price of the car is going to be about the same as a hybrid is today, 1,000 or 2,000 more than a gasoline vehicle. But if you could triple your mileage for 1,000 or 2,000 bucks more on the sticker price, would you do it? Just ask that question. Would you do it? If you had no range anxiety and tripled your mileage and just had a 3-gallon gas tank that powered the battery if you drove over 100 miles in a day, would you buy that car? Everything else about the car is better, right? It's a no-brainer. Everybody's going to buy that car. And Ford's going to be a leader in that. And I would imagine GM will have a good one too. Some of the other charts, she put something up for Rockwell. I have to pay a lot of attention to Rockwell. A, they're a Milwaukee company. But B, I have a couple of clients with gigantic positions. They bought these stocks they bought Rockwell like 10, 15, 20, 30 years ago. Every time it gets up here, it's been a trim, right? That spike here, I think that's a double top. Will it triple top? I think on the QE next year, maybe by 2027, it's back up here, but it's not a big jump from 200s to 300s, right? Not exciting. Pretty good stock to sell options on. AQN, told you that there was almost no downside when it was here. The upside is narrow. I mean, should get to here eventually and then up to here. This is just something you hold until the private equity firm fixes the company, then you sell it. Sunrun, all the solar stocks are getting interesting, right? TAN, we've talked about selling puts on TAN. Sell puts on the dips, folks. I do think TAN has a chance to get into the lower 20s. I don't know about this bar, but bottom of this bar. Again, because when the market sells off, anything of any capitalization is going to sell off. Your teeny tiny companies are pretty insulated unless they have debt problems. So MP Materials is one that we sold some puts on and the stock ran. If it gets back down into the teens, which is what I think is going to happen, we want to sell puts on this because the story on MP Materials is pretty strong over time. I do think it gets back up into here. It'll take time. This has been 4 years probably when it double bottoms, right? Because this is a good trend. So if it double bottoms here, that's good. If it double bottoms here, that's a gift. But then over the next 4 years, I think it probably gets back up to here, maybe by 2028, early 2028. The battery technology has been getting so good that this is a pretty constructive bottoming process, right? So if we get those overshoots, because I think these are legitimately undervalued at this point, just the market doesn't care yet. So if the market beats it up one more time just because, hey, it beats up things that it's been beating up, right? There is definitely the propensity for the market to kick things when they're down. So if you get a chance in the low 30s on lit, I think suddenly we want to own it because when everybody realizes what EREVs are, boom, you might get a 2-3 year rally where it goes all the way back up to 90 from 30. Right. Do you like tripling your money in a few years? I do. All right. So last thing I'll talk about is Bitcoin. I do not agree with this guy on everything ideologically because he talks about politics, but he is a hell of a chartist. And he's been charting Bitcoin a very long time. And he shows, right? He's showing the range of how Bitcoin moves. He thinks Bitcoin is not likely to break out of this range. I tend to agree with him. I think we get one last correction, then I think this does change. It could be doing it right now, but it doesn't fit. For this to, because usually when they flatten out like this, then you either completely turn over or you inflect back up. And I think that's what's coming for Bitcoin. I think after this next correction, and I don't think it gets all the way down there, I think it's more like here. I think this curve bends up and it does a parabolic rise up to about 300,000, maybe more. And then we'll see what happens after that. But one thing I would ask you is this. Michael Saylor just keeps buying Bitcoin with borrowed money. And now a couple of other companies are talking about doing it. Smaller scale, but they're going to do it too. They've brought out a new version of SBF, cleaned up, say that he follows the rules, which I'm sure he does. But they just have a new and improved SBF out there talking about Bitcoin and crypto. I forget the guy's name. Is it Matthew something? But they're just going to rehype Bitcoin and some of the other coins. And they're going to spike on the QE. And then the governments are going to come in and regulate the hell out of them because with quantum computing, blockchains can be broken. Yeah, that's the dirty little secret of blockchains. If you have powerful enough computing, you can break some of them. So they have to come up with a solution to that. Because as quantum computing gets closer and closer, we'll never get there. But as it gets closer and closer, and computing power 10x's, then 100x's, then 1000x's, because those are all coming in the next decade or two. You really don't want to see Bitcoin easily stolen or some of the other cryptos, which are really just SaaS, software as a service replacements. Bitcoin is trying to become digital gold. And if Michael Saylor and a handful of others suddenly control 30 or 40 or 50 or 60 or 70% of it, if the whales control most of it, then how is Bitcoin what it's supposed to be, right? If you have the 1%ers buying all the Bitcoin, how is it a democratization of economic power? The answer is that it's not. And although Saylor has set up his company to just dilute itself if the price of Bitcoin goes down so that it doesn't actually have to have, a debt problem, what that means is that at some point, MicroStrategy, which is now just called Strategy, because he didn't like the micro jokes that were told about his company. At some point, MicroStrategy is going to be one heck of a short. If the price of Bitcoin starts to go down, Strategy, because they have set up their borrowing to be dilutive, it's an exponential short. It could literally drop 80 or 90% in price if Bitcoin has a sustained bear market. He is on a tightrope. He's doing a heck of a job. Oh, look at that guy walk that tightrope until the wind blows. So that is my keep an eye out for a super duper short on Strategy because it's coming. Because nothing goes up forever. And it's tied to Bitcoin and it's highly leveraged. And his debt converts into shares if the price of Bitcoin goes down. Massive dilution coming to Strategy at some point. Shooter, your job is to figure out the day, maybe the week. I'll give you a week. All right. Anybody have any specific questions about any of our securities? I'm still short the banks. I think adding to KRE puts right now is probably a pretty slick move. Katera, I don't know there's really anything to say about Katera. It's just an oil and gas company that's very well situated, right? That's a pretty strong pattern, isn't it? Probably sell cash secured puts right here. I already talked about Sirius. Same thing. Just keep buying Sirius or selling cash secured puts and taking possession of the shares, right? This means that this triangle, right? So it's already told you when it pops, it'll probably pop pretty good because we're going to get a quarter where Berkshire announces that they bought a zillion shares. Berkshire's just laying off right now. They're waiting for the credit crisis. SunPower, I mean, it's so cheap. If you're looking for stocks to buy that could become super duper, and really, this is the company, right? Nothing else matters with this company prior to this year, right? Let's do year to date. Why is that? Why does only this year matter for SunPower? Tell me, why does only this year matter for this company? Come on. Bueller. If you're going to invest your own money, you have to think about these things. This was a SPAC that was tiny. And for $45 million, they bought the shell of what had been a $9 billion company. And suddenly their revenues are more than their market cap. Do you know they're already the 6th or 7th biggest solar company in America? And they're trading for zero, almost zero, right? So here's the thing. This chart doesn't really exist. None of this is really part of this company. They merged the charts incorrectly. I don't even think CSLR will show up. Maybe it will. Yeah, CSLR doesn't even show up anymore. This company didn't exist back here. They connected the SunPower charts together. So if you want to think of it this way, the new company, which started to exist right here, that's the SPAC. SPAC came way down. And then down in here, they bought SunPower, which is all of this. They own this company for this price with no debt. Now, a little bit of debt, not much. Imagine if you could have bought SunPower before without any of the debt, right? The debt drove them under, caused Total to divest them and take the tax break. And suddenly, for $45 million, you get a debt-free SunPower. You just keep all the parts that you want to keep. The distribution network, you cut new technology deals, right? You only keep the good parts. You got rid of all the bad parts and all the debt. Now, these targets are probably wrong unless this matters. Well, hey, if it's really just the same company without the debt and without the bad parts, maybe it does go to the moon. And that's why you take a position here. You don't say, what does the chart say? Fuck the chart. You're getting something worth hundreds of millions of dollars based on revenue, not even applying a multiple for $100 million. All right, let's call it a day. I got things to do. All right, have a good day.